Imagine you owe someone $35,000 on your credit card. Scary, right? Now, think about the stress and anxiety that would bring into your life. The sleepless nights, the constant worry about how to make ends meet, and the overwhelming feeling of being trapped in a financial nightmare. Now, imagine that debt multiplied by a billion. That's roughly the amount of money the US government owes, a mind-boggling $35 trillion. This isn't just a number on a screen. It's a staggering amount that affects every single one of us. This isn't just some abstract number. It's a ticking time bomb with the potential to blow up the economy. The consequences of such a massive debt are far-reaching and could lead to financial instability, higher interest rates, and even a potential economic collapse. We're talking about the US national debt, folks, and it's bigger than any of us can truly comprehend. It's like a shadow looming over our future, affecting everything from government spending to social programs and even our national security. It's like the entire country decided to go on a shopping spree and put it all on a single credit card. But unlike a personal credit card, this debt isn't something we can easily pay off or ignore. And guess what? We're all stuck with the bill. This debt impacts every American, from the youngest child to the oldest retiree. It affects our taxes, our public services, and our overall quality of life. So buckle up, because we're about to dive deep into the rabbit hole of US debt. It's a complex issue with no easy solutions, but understanding it is the first step towards addressing it. We'll break down why this matters, how we got here, and what might happen if we don't get our financial house in order. From historical events to current policies, we'll explore the factors that have contributed to this massive debt. Spoiler alert, it ain't pretty. The potential consequences are dire, but by understanding the problem, we can start to find solutions and work towards a more stable financial future. Okay, so the national debt is huge, but why should we, the average Joes and Janes, care? Well, think of it this way. A country with a mountain of debt is like a company drowning in loans. It struggles to invest in its future, its credit rating tanks, and eventually things start to fall apart. This means less money for important things like education, healthcare, and infrastructure. It also means higher interest rates for everyone, making it harder to buy homes, cars, or even just keep up with everyday expenses. In a nutshell, a ballooning national debt affects us all. It impacts our wallets, our futures, and the overall well-being of the nation. Believe it or not, there was a time when even reaching $1 trillion in debt seemed unimaginable. That fateful day came in 1981, marking a turning point in US fiscal history. Back then, it was a big deal. Politicians panicked, economists sounded the alarm bells, and the news was filled with doom and gloom. Fast forward to today, and we've blown past that once unthinkable milestone like it's nothing. The scary part? The debt has been growing at an alarming rate ever since. It's like we've become numb to the sheer magnitude of the problem. So how did we get into this mess? It's a complicated story, but essentially it boils down to this. We spend more than we take in. Over the years, a combination of factors, tax cuts, wars, recessions, and increased spending on social programs have contributed to the ever-widening gap between revenue and expenditure. It's like constantly ordering takeout, buying the latest gadgets, and going on lavish vacations, all while maxing out your credit cards. Sure, it's fun while it lasts, but eventually the bills come due. Okay, so we get it, the debt is bad, but let's dive deeper into what this really means for all of us. But what's the worst that could happen? How bad can it really get? Well, picture this, a future where the United States can't make its debt payments. Imagine the chaos that would ensue. This would be catastrophic, leading to a loss of confidence in the US dollar, skyrocketing interest rates, and a financial system in disarray. We're talking hyperinflation, market crashes, and widespread economic turmoil. The ripple effects would be felt across the globe. Think Greece in 2015, but on a much larger scale. The economic crisis there was devastating, but this would be magnified many times over. Not exactly the kind of future we want to leave for our kids and grandkids, right? The impact on families would be profound and long-lasting. And that's not even the whole story. The consequences would extend far beyond our borders. A high national debt also weakens our standing in the world, diminishing our influence and credibility on the global stage. It makes it harder to influence global affairs, negotiate trade deals, and maintain alliances, and respond to international crises. Our ability to provide humanitarian aid, support allies, and maintain peace would be severely compromised. The stakes are incredibly high, and the potential fallout is something we must take seriously. The time to act is now before it's too late. Here's the thing about the US economy. It's like a giant engine that powers the global financial system. When that engine sputters, the whole world feels the tremors. A US debt crisis wouldn't just impact Americans. It would send shockwaves across the globe. We're talking about a domino effect that could trigger recessions, currency collapses, and political instability in countries around the world. Remember the 2008 financial crisis? Yeah, that was triggered by a housing bubble in the US, but it quickly snowballed into a global economic meltdown. A US debt crisis would be like that, but potentially much, much worse. Way in, taming the debt monster. So how do we fix this mess? The national debt has ballooned to unprecedented levels, leaving many wondering if there's a way out. Well, there's no easy answer. The complexity of the issue means that simple solutions are often ineffective or even counterproductive. Economists and policymakers have been debating solutions for decades with no clear consensus in sight. Each proposed solution comes with its own set of challenges and trade-offs. Some argue for drastic spending cuts, believing that reducing government expenditure is the only way to balance the budget, while others advocate for tax increases, suggesting that higher taxes on the wealthy or corporations could generate the necessary revenue. Still, others believe a combination of both is necessary. They argue that a balanced approach, incorporating both spending cuts and tax increases, is the most pragmatic solution. There are even those who suggest more unconventional approaches, such as implementing new financial technologies or innovative economic policies, like selling off government assets, which could provide a one-time influx of cash, but may not be sustainable in the long run. Or printing more money, which, let's be honest, sounds a bit like setting your hair on fire to put out a grease fire. This could lead to inflation, devaluing the currency and causing more harm than good. The truth is, there are no quick fixes or painless solutions. Each option has significant implications that need to be carefully considered. Addressing the national debt will require difficult choices, political will, and a commitment to long-term strategies rather than short-term gains, and a willingness to compromise. Bipartisan cooperation will be essential to create and implement effective policies. It's like going on a strict diet after years of overindulging, a challenging but necessary step to regain financial health. It's not going to be fun, and there will be resistance and discomfort along the way, but it's necessary for our long-term health. Just as with the diet, the benefits of addressing the debt will be seen over time, leading to a more stable and prosperous future. Time for a reality check. The US has been living beyond its means for far too long. We've been kicking the can down the road, hoping that somehow, magically, the problem will solve itself. But guess what? Magic isn't real, and neither are free lunches. We need to face the music, folks. The national debt is a serious problem that demands our attention. Ignoring it won't make it go away, it'll only make it worse. It's time to ditch the rose-colored glasses and see the situation for what it is. A ticking time bomb that threatens our economic future. What's at stake? Ultimately, the US national debt is about more than just numbers on a balance sheet. It's about the promises we make to ourselves and to future generations. It's about the kind of country we want to be and the legacy we want to leave behind. Do we want to be a nation crippled by debt, unable to invest in its future or provide for its citizens? Or do we want to be a nation that lives within its means, tackles its challenges head-on, and builds a brighter future for all? The choice is ours. The time to act is now.